It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast as we talk property news, of course, 7 days a week, as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. Hope your week is going well up to a Thursday morning and the very first day of August for 2024, a brand new month. And if you are currently trying to save for your first home, well, buyers with a $50,000 deposit still have options in the Australian property market. Domain, in fact, highlighted over 100 affordable suburbs across major capital cities where a $50,000 deposit can cover 10% of the purchase price. However, for those looking to avoid lenders' mortgage insurance and put down 20% deposits, only two capital city suburbs are going to fit that requirement. So good luck if you have got $50,000 and are about to buy in one of those locations. Now, we've been talking about next week's RBA meeting. Of course, it's happening on Tuesday, and one of the set of numbers that we have been looking forward to seeing is the CPI figures, which are, of course, a fundamental driver for the way in which the RBA are going to react one way or the other next week. Now, we are catching up with Economist Besa Deda, and she is joining the Real Estate Breakfast. And Besa, a very good morning. Welcome to you. First off, I have to ask, mortgage holders, they're holding their breath once again. As I say, the RBA, they're meeting next Tuesday. Perhaps you can unpack for us this morning the CPI figures which were released yesterday and your first impressions.
Well, Craig, I think mortgage holders would breathe a sigh of relief after the inflation numbers that were published yesterday. And the reason being is that this inflation report was largely seen as a bit of a make or break report. There was some in the market that thought if it's an ugly number, the RBA may be forced to hike rates again. I think they would be a very reluctant hiker, and the threshold for another rate hike is high. But in the event, the headline inflation numbers came in line with expectations at 3.8% for the June quarter, or the year to the June quarter, I should say. And the underlying inflation numbers, which I think get more attention and dampen the impact of those prices that move around a lot, well, that moved a little bit under expectations. So it moved from 4% in the year to the March quarter to 3.9% in the June quarter, and is only a smidgen above the RBA's own forecast, which I think will give the RBA breathing space to leave rates on hold for now.
Wow, so there is a little bit of good news for the first day of August. If you are a mortgage holder, that has got to be some good news. So there's really no reason then for the RBA to look at hiking this up next Tuesday from your point of view.
Look, I think they'll certainly discuss a rate hike. The last time they met for a board meeting, they discussed whether to leave rates on hold or whether to hike rates. Given that the underlying inflation rate is a tad above their own forecast, I think that a rate hike will still be discussed. But they're reluctant hikers, and you are seeing weakness in other parts of the economy, particularly with discretionary spending by consumers. And we saw more evidence of that in the retail sales data yesterday that was published. So, look, I think on balance, the RBA would be comfortable to continue to leave the cash rate on hold and wait for further information.
I know that you were the former chief economist at Westpac Business Bank. all sorts of different theories from various banks around Australia when it comes to a rate cut. What camp are you in personally? Do you think that we're likely from the RBA to see a cut before the end of 2024? Because some of these banks are now saying by the middle of next year we can expect one.
There's certainly a divergence of opinion. My own view is that there's a good chance we could see a rate cut late this year or early next year. If we have a look at market pricing, which gives us an idea of what interest rate markets are attaching to a rate cut, before that inflation data, a rate cut around May of next year was fully priced. That's now been brought forward, and there's about an even chance of a rate cut in December. So markets don't see a rate cut before the end of this year as a done deal yet, but certainly after the inflation data, the bets on a rate hike have really dissipated.
Now, I want to ask you, particularly off the back of those CPI numbers, are businesses well placed to navigate the current economic conditions, especially those businesses who have reasonable mortgages to service at the moment, because some of these businesses are really hurting around the country?
There's certainly, again, a variance among businesses. Very small-sized businesses are doing it a bit tougher. But in aggregate, what we've really seen in the data and also through liaising with businesses is that businesses are more resilient. And in actual fact, businesses are more resilient than consumers. So where consumers are feeling quite downbeat about current economic conditions and future economic conditions, businesses are more cautiously optimistic about the outlook. And in aggregate, businesses still have reasonably good financial buffers that they can tap into. Whereas when we look aside to consumers, household savings have been run down and they're not in as good a position as what they were. And so you are seeing a slowdown in consumer spending growth, which is seeing slower economic activity materialise. Whereas on the business side, there is that stronger resilience.
And just in terms of the lag, we talk about the lag all the time, and I know that the RBA, they've been waiting and waiting for the worm to turn. Is there more good news, do you think, between now and Christmas economically?
Well, I think the economy really is like a toddler at the moment. And that is, it's a child that's toddling along, not falling over, holding on to the furniture. There are some bright spots in the economy, but equally there are some weaker spots. And for the Reserve Bank, they see the economy as being on a narrow path, but that path becoming narrower. And what they mean by that narrow path is they're trying to bring down inflation into a 2 to 3% target band. And we know from yesterday's data that that headline inflation rate is now 3.8%. So inflation's still elevated, but it has been coming down and it's headed in the right direction. And they'll be keeping a close eye on whether there's any stickiness that might prevail or continue. And at the same time, they want inflation to come back down to that target band without producing a sharp rise in the unemployment rate. And we have seen the unemployment rate tick higher, but it has only ticked higher from a historically low level of 3.5% in late 2022 to 4.1% recently. So they're trying to juggle that, and I think what we're seeing is really an economy that is toddling along. It has avoided a recession. I still think there's good reasons that we may continue to avoid a recession, but the big goal for the Reserve Bank is to try and bring inflation back down sustainably in that target band, because inflation does hurt all of society.
All right. Well, we'll leave it there, Besa. Thank you so much for breaking all of that down for us this morning with our listeners, especially those CPI figures. And let's hope that, yes, better things are to come between now and the end of the year. And thank you so much for coming on to the Real Estate Breakfast.
Thanks so much, Craig.
Every week, we present so much real estate. Powerful, up-to-date news every morning from 6 a.m. Know your property with us on the Real Estate Podcast. It's time to go back to the Real Estate Vault for this week's property comment.
And the property market, it can be incredibly competitive with bidding wars and auctions adding to the pressure. And some people, they can just crumble during the buying process because of that unrelenting and at times competitive process. So that's really one for people to work on.
Absolutely. And look, it's very difficult to plan, but I think sometimes planning for that particular auction or that particular negotiating process can help. Getting really clear on what your limit is, getting really clear on what you would do in certain situations, and really sticking to that plan. I guess where it's become really tricky lately is a lot of these prices, I guess they defy expectations, and it just seems to be one of these things that is constantly moving and constantly adjusting. But I think having a good solid plan and then just trying to really manage your emotions during that would be great. There's some tools you can use to manage anxiety, even simple ones, simple breathing tools would be quite helpful. And just having maybe somebody there with you who's, I guess, not too invested in it, who can just talk you down and just make sure that you stay on track with what your plan is. And it's when you start going off the script and off plan that things can start getting a bit anxious, when the anxiety can start.
I'm just thinking, Arthur, you can imagine at an auction, somebody has brought in a breathing coach and helping them breathe. Everybody's looking, wondering, what's going on? Is this some sort of...
That's a great idea, actually. I might think about that.
From buying strategies, a fluctuating market, the importance of data, geographical differences, confidence in the market, rental yields. Stay informed every morning from 6 a.m.
We do have those conversations with clients because it is so much easier really with a PAYG. Some banks are just one pay slip and that's it, which sounds crazy because you can be running a really good business for a year and have that history, but the bank won't use that over one person that has one pay slip to provide. So sometimes it feels a bit unfair.
For those people that have just started their business, what do you say to those customers that come through your door that have just gone out on their own?
Yeah, we can definitely still help. So again, some of the lenders will only need a short-term ABN or a very recent one. So some of the banks will still lend, and a person at the moment might be paying a slightly higher interest rate because it's more risk to the bank.
A big portion of that strata fee is building insurance. In Brisbane, we had a major flood event back in 2022, and I think that's increased a lot of the insurances as part of the levies as well. People tend to be more drawn to these older apartment styles because in Brisbane, $4,000 to $5,000 is on the cheaper side.
We connect you to the best real estate information across Australia. The Real Estate Podcast.